So there are other laws as well, but these are the laws where the chartered accountant and his client are exposed to the proceedings. So Prevention of Money Laundering Act, the authority that governs the law, administers the law, is the Enforcement Directorate. The Prohibition of Benami Property Transactions Act is within the domain of Benami Prohibition Unit, BPU. Of course, it is a separate cell of the investigation wing of the income tax department. Black Money Act is with income tax authorities. Income Tax Act, of course, is with income tax authorities. I have taken Income Tax Act as an economic offense law as well, just because in the recent years, income tax department has launched prosecutions on large scales. Though the actions are at a very initial stage, the cognizance are even not taken in most of the cases yet, but it is just a matter of time. But I have also categorized the Income Tax Act as economic offense law just for the purpose of today's discussion, because we will be discussing the punishment and the prosecution provisions. So, of course, the income tax authorities administers the Income Tax Act. GST authorities deals with the Goods and Services Tax Act. Again, typically the fiscal law, but still we will see further that GST department has the power to arrest. So it is not just about the penal provisions or the prosecution provisions. This is a fiscal law, but still the authority has power to arrest. And how these powers are used and what are the remedies and what are the actions to be taken by the chartered accountants, we will see at a later stage. But Income Tax Act and the GST being the fiscal law, still I have considered those as a economic offense laws for today's discussion. Companies Act, because again there is a punishment under Companies Act, and the authority is Serious Fraud Investigation Office, SFIO, which deals with the offenses under the Companies Act. Again, the chartered accountants being the statutory auditors certifies the compliance as well as the various provisions of the Companies Act through the audit reports and CARO. So Companies Act is also, the SFI is also the agency that chartered accountants face regularly whenever the proceedings are initiated against the client. So these are the primary economic offenses which I have identified for the purpose of today's discussion, and these are the authorities which deal with the with this. So with these laws. So these are different laws, different consequences, different punishments. Same time we have different agencies dealing with it. So these different agencies have different approaches to to deal with the punishments and the evasions or the offenses under this act. So what are the punishments? I have not taken each and every section from these statutes, but just to give you all the flavor as to how what is the range of punishments under these laws. So if you take Income Tax Act, chapter 22, which deals with the prosecution, has multiple sections, multiple offenses, multiple punishments. But I have just taken this slide just to give you as to what the broad range of punishments we have under these different laws for the punishment. So if you go to the PMLA, section 4, which deals with the imprisonment, it says that rigorous imprisonment not less than 3 years, but which may extend to 7 years and fine. Benami law, chapter 7, which says that rigorous imprisonment from 1 year to 7 years. So this is a range of punishment that we have. Under the Black Money Act, we have multiple sections. The punishment ranges from 6 months to 7 years. Under Income Tax Act, we have chapter 22. We have punishments ranging from 3 months to 7 years. The GST Act, we have section 132, where the imprisonment ranges from 1 year to 5 years. And under the Companies Act, we have punishments and the imprisonments which ranges from 6 months to 10 years. So what is the purpose of specifically dealing with as to what is the quantum of punishment is that you will understand here what is the bailable offense and non-bailable offense. Then you will understand the significance of why I have dealt with separately with the quantum of punishment. So let us come to the slide of bailable offense and non-bailable offense first. What is bailable offense and non-bailable offense? There is a very, very common misconception that the bailable offense is the offense in which the accused is entitled for bail and is eligible for bail. And the non-bailable offense is the offense in which the accused is not entitled or eligible for bail. So this is a common misconception. So what is the reality? The bailable offense is defined under section 2A of CRPC. So CRPC has schedule first. So first schedule, which is in a tabular form, which deals with all the offenses under the IPC, Indian Penal Code. And each and every offense in the first schedule of CRPC is classified as whether it is cognizable or non-cognizable and bailable or non-bailable. At this stage, I will just deal with the cognizable, non-cognizable. As cognizable is the cognizable offense is the offense for which the police or the authority police does not require the warrant or cognizance to be taken before the arrest. So they can arrest even without a warrant. And in case of a non-cognizable offense, they need a warrant to arrest. So that first schedule contains a tabular form where all the IPC offenses are defined and which classifies each offense as whether it is a bailable, non-bailable. So you can simply refer the table and get to know whether the offenses under IPC are bailable or not, or non-bailable. But what in case of the offenses other than IPC offenses? Just we discussed about the offenses under the economic offense laws. So how do you decide whether offense is bailable or non-bailable? There are certain statutes among these where it is specifically mentioned that the offense is cognizable and non-bailable or non-cognizable and bailable. But there are statutes like, say, for example, Benami law, where it is not specifically mentioned whether the offense is bailable or not. How do you deal with that? For that purpose, there is a second schedule to CRPC, which specifically says that there are slabs to decide whether the offense is bailable or not. So if the offense is punishable for a period less than 3 years, then it is a bailable offense. In case of the punishment other than IPC offense, it falls under the second schedule of CRPC, according to which if the offense is punishable for a period less than 3 years, then it is a bailable offense. So all the offenses which are punishable for 3 years onwards, even 3 years is more than less than 3 years. So offense which is punishable for 3 years is also a non-bailable offense unless it is specifically mentioned under a particular statute. So that is how you decide whether offense is bailable or not, or non-bailable or not from the table. So now if you look at the earlier table again, here we have different statutes where the punishment ranges from, right from 3 months to even say 10 years. Here we need to check every section, what is the charge against the client. Let it be Income Tax Act, let it be GST, let it be any other law. Whether the client is charged for a particular offense, and as per that particular statute, what is the quantum of punishment. So if certain offense under Income Tax Act is punishable up to 2 years, then offense is a bailable offense. Otherwise, if the punishment is up to 7 years, though the act is silent, it does not mean that it is a bailable offense. As per second schedule of CRPC, it is a non-bailable offense. But now what are the consequences if the offense is a non-bailable offense? Does it mean that the client is not eligible for bail? Client is not going to bail? No. See, the bailable offense is an offense where the accused or applicant can claim the bail as a matter of his right. It means that no agency can hold the applicant or accused in the custody if he has committed or he charged with a bailable offense. So in case of a bailable offense, the accused can claim bail as a matter of right. Whereas in case of a non-bailable offense, applicant or the accused has to approach the court, and it is discretion of the court considering the merits of the case to decide whether the bail is to be granted or not. So even if the offense is not bailable, it does not mean that the client or the accused is not eligible for bail. It means that he cannot claim bail as a matter of right, but he can approach the appropriate court and he has to apply for the bail, and bail will be granted by the court at its own discretion based on the merits of the case. So non-bailable offenses, definitely bail, you can obtain the bail, but you have to apply for bail before honorable court, and then court grants bail at its own discretion. So please just be out of that misconception that in case of a non-bailable offense, you cannot get bail. Now coming to the next part, what is arrest and what are the prosecution complaints? So see, we discussed about various agencies and various acts. There are certain agencies who have the power to arrest. Say for example, Enforcement Directorate, GST authorities, SFIO, they have power to arrest. So under PMLA, under Companies Act, or under GST, the person may directly be arrested because that authority has power to arrest. Whereas if you look at other laws and other agencies, like say Income Tax Department for that matter, under the Income Tax Act or Black Money Law or under Benami Act, the authority does not have power to arrest. Though what in that case, what happens in case of there are punishments prescribed, but there is no power to arrest. See, in all these offenses, these are agencies, these are not the police officers. So the in any case they have to file the prosecution complaint with the appropriate court. There are usually in all these acts there are special constituted courts. So these agencies have to file the prosecution complaint. So for example, let us take an example of say GST department or Enforcement Directorate. During the process of investigation, they may arrest the person, they may take person in the custody. That person may still be in the custody of Enforcement Directorate, or maybe the judicial custody has been granted and the person goes to the prison. Once the investigation is concluded, they file a prosecution complaint. So filing the prosecution complaint in all these cases is necessary. So what is a prosecution complaint? This is nothing but the way police files charge sheet, these agencies file prosecution complaint. So prosecution complaint in any case is to be filed. So these agencies file the prosecution complaint. So whenever we are dealing with the proceedings under this act, we need to see whether that authority has power to arrest or not. Based on that, we need to plan certain actions while attending the office of that agency, making the submissions, taking client to the office of the agency. We need to see what powers these authorities have. So as I said, Enforcement Directorate, SFIO, and GST, among these acts have power to arrest. So they can arrest the person and then investigate, then conclude the investigation, and then they will file the prosecution complaint before the special court. And in other cases like Benami, income tax, there are also black money law, there are also special courts defined, designated special courts. In that cases, these agencies do not have power to arrest. So they will have to investigate the case. They will have to record the statements. They will make a case, and then they will simply have to file the prosecution complaint before the appropriate court. Once that complaint is filed, then the proceedings, then the court takes the cognizance, then issues the summons, then the procedure follows. So just for you all, prosecution complaint is to be filed in all the cases, but certain agencies have power to arrest and certain agencies do not have power to arrest. So if income tax authority is initiating proceedings under Benami Act, you need not be worried about your client getting arrested, though there is punishment up to 7 years, because that authority does not have power to arrest. They will have to follow only the prosecution complaint route before the appropriate court. So, but when you're dealing with the other agencies like Enforcement Directorate or even GST department, there you need to be careful because these agencies have power to arrest. Now, burden of proof. These different acts have different provisions with respect to the burden of proof. So we will first see what the burden of proof in the criminal law is. We always know that the presumption of innocence. In India, we follow the presumption of innocence under the criminal law. It means that the person is to be considered as innocent till the time he is proven guilty. And how that guilt is to be proved by the prosecution? That guilt is to be proved by the prosecution beyond all the reasonable doubts. That is a basic principle of criminal law we know in India. So that is what the basic principle is. However, the lawmakers have treated these economic offense laws separately. And in these cases, the burden of proof is reversed in most of the statutes. If you look at section 24 of PMLA, the burden of proof is reversed. It says that once the person is accused for the offense of money laundering, then it shall be presumed, unless the contrary is proved, that the proceeds of crime are involved in money laundering. So this is what section 24 of PMLA says. So does it mean that this is a reverse burden of proof? We have cut in our judgment says that yes, it is a reverse burden of proof, and the accused will have to prove that the proceeds of crime are not involved in money laundering. But I'll just take a pause here and we'll take this opportunity to discuss as to what is money laundering. So in common parlance, everyone talks about money laundering. Anything wrong, any cash conversion is done, they treat it as a money laundering. We chartered accountants often see that if we see the accommodation transaction, we feel this is money laundering. Everyone talks about money laundering, but what is money laundering? Not in common parlance, but as per the Prevention of Money Laundering Act. So, Section 3 deals with the money laundering. What does it say? That in short, it says that wherever there are proceeds of crime and proceeds of crime are attempted to be converted into the untainted money, then that is the money laundering. That is offense of money laundering. Now, what are the proceeds of crime? That is defined under Section 2U of PMLA. Proceeds of crime, in short, are the proceeds generated out of the activity relating to the scheduled offense. So it takes us to the scheduled offense. So what is scheduled offense? PMLA has first schedule, under which there are 29 statutes and there are defined laws, defined offenses under those particular statutes. So if the proceeds are generated by committing any of those scheduled offenses, then those are to be treated as proceeds of crime. And once those are proceeds of crime, then there is a presumption under Section 24 of Prevention of Money Laundering Act, which operates, according to which it will be presumed that those proceeds of crime are used for the purpose of money laundering. So what is necessary? That the accused must have committed the scheduled offense. So whenever we are dealing with any proceedings before the enforcement directorate, what is the first step we need to check is that which scheduled offense has been committed by the client. You may definitely come across situations that enforcement directorate, suppose you may notice that enforcement directorate may initiate proceedings, but you are not clear as to what scheduled offense the client has committed. For example, I'll just give you 420 under IPC. It is a scheduled offense. So typically you may see that various banks file complaints and ED proceeds in the matter, or bank scams. Why does ED proceed? Because what happens, that suppose the client has borrowed funds from the bank and he's not regularly repaying the loan. After a certain period of time, the account becomes NPA. Then bank investigates and realizes that the funds are diverted or not used for the purpose of particular project for which the funding had been taken. The projections were also wrong. So bank files a criminal case against that particular borrower. And what are the charges brought in that complaint are under Section 420. If the quantum of loan is very large, 420 is a scheduled offense under PMLA. So whenever anyone commits scheduled offense under PMLA and the FIR gets registered, first information report gets registered, then ED gets jurisdiction to invoke PMLA in those cases and they may initiate proceedings. So what is the first step one needs to do is that you need to understand in case of a PMLA what scheduled offense the client has committed. Because unless there is a scheduled offense, there cannot be proceeds of crime. And unless there are proceeds of crime, there cannot be money laundering. There is another argument which can be made, I'll be making it very soon before the court, that what that presumption says, the presumption says that what is to be presumed that the proceeds of crime are used for the purpose of money laundering. It does not say that the proceeds are to be presumed as used for the purpose of money laundering. I'll tell you what is the difference. Say that, as I said, in case of a bank, 420 was invoked and 420 being the scheduled offense. In that case, first scheduled offense will have to be established. Unless that scheduled offense is established, my proceeds are not to be treated as proceeds of crime because that scheduled offense is not yet established against me. And unless that scheduled offense is established, or I'm not, that offense is not established against me, the proceeds are not to be treated as proceeds of crime. And unless those are proceeds of crime, there cannot be offense of money laundering. However, the typical interpretation which has been done is that once 420 is first 420 is invoked, it means that the money laundering has taken place because 420 is a scheduled offense. But according to me, first it is necessary to establish that the offense of 420 has to be established, because without that the proceeds will not be considered as proceeds of crime, and unless there are proceeds of crime, there cannot be money laundering. If that was the intention of legislature, the presumption would have been that once the scheduled offense is committed, once there is a scheduled offense, then proceeds are to be presumed as proceeds are to be presumed as used in the money laundering. That is not the presumption. The presumption says that proceeds of crime are involved in money laundering. So what is a takeaway? We need to first see what is the scheduled offense committed by the client. There is a chance that client might not have committed a scheduled offense. Say, for example, a criminal breach of trust, 406 of IPC is a serious offense, but it is not a scheduled offense. So you need to check whether the client has really committed any scheduled offense. Now, Benami Prohibition Act. Now this act is silent as far as the burden of proof is concerned. And there is cutting of judgments in the past, right from Supreme Court to all the high courts. We state that this is a typical criminal law, the punishment provision, and hence the burden of proof is on the prosecution. See, even as per the Evidence Act, the burden of proof is on the party that asserts the affirmative. So in case of, say, Benami transactions law, the BPU asserts that this is a Benami transaction. So burden of proof is on the BPU to prove that it is a Benami transaction and not the contrary. The Benamidar or other parties to the transaction are not supposed to prove their innocence. So Benami Prohibition Act is silent about the burden of proof. There is no such presumption or reverse burden of proof. So the burden of proof is on the Benami Prohibition unit to prove that this is a Benami transaction. Again, Black Money Act, Income Tax Act, and the GST Act. Identical sections similar to sections 278E of the Income Tax Act, presumption of culpable mental state. So actus reus and mens rea, as we know that these are the two essential elements for the constitution of crime. So there has to be action and there has to be guilty mind. So here there is an action, but how the mens rea, I mean how do you prove that there is the client or the accused had guilty mind? So if the offense is committed under any of these three acts, then there is a presumption of culpable mental state, according to which, unless the contrary is proved, it shall be presumed that the client had guilty mind, in short. So these three sections, and this is again, as I said initially, that there is a principle in criminal law that the presumption of innocence is there. So is it right to hold that at the beginning of the proceedings itself, that is it right to hold that the person is of guilty mind? Is it constitutionally right? So for that, I would suggest the participants to refer to the Selvi Jayalalitha judgment of Madras High Court, where the constitutional validity of 278 capital E was challenged. It's a wonderful judgment, and the constitutional validity, it's a long judgment, but this issue has been dealt with great detail, and it has been held that the provision is constitutionally valid. So this has already been tested. But here, say simple case, income tax return not filed, prosecution launched. So how does the income tax authority, so I'm just taking a fair view, that how does income tax authority prove that the assessee had guilty mind not to file the tax return? So in that case, the assessee has to prove before the court that, because of these circumstances beyond control, I was not in a position to file return because of some reason. Say for example, I was admitted in a hospital. I was, facing serious illness. Me or my family member was facing serious illness. Because of this dispute, something happened. My office caught fire. I had no records. Something like this, situations beyond control. I was not in a position to file the return. I'm just giving an example. So the burden of proof in this case also will be the reverse burden of proof, as I said. So the assessee will have to prove that he did not have guilty mind when the action was committed. And again, there is subsection which says that this presumption, reverse burden of proof, as I said. So unless the contrary is proved, so assessee in these cases will have to prove this not just by the preponderance, but beyond all the reasonable doubt. So the burden will have to be discharged with a higher threshold. As we know that, in fiscal laws, the cases are usually decided on the basis of preponderance of probabilities. But in this case, this reverse burden of proof will have to be discharged by the assessee or the client beyond all the reasonable doubts. So say, for example, still someone says that I was unwell, so I could not file the return. that is fine. But what was the time limit for filing the return? Suppose 31st of July, and you was hospitalized in the month of June. So what stopped you from filing the return in the month of July, for example? So, it cannot just be the preponderance of probabilities, but you will have to prove your case beyond all the reasonable doubt. But in spite of all this, what I feel is that still the initial burden of proof is still on the agency. How? Again, just the simple example, return not filed, the assessee will have to prove beyond all reasonable doubts the reasons why he could not file the return. But at the same time, the initial burden to prove that the return has not been filed is on the prosecution. We have just taken the example of the simple offense, so it is easy for the income tax department to discharge the initial burden that the return was not filed because it is not on the record. But there are other offenses like falsification of accounts or false statements. In all those cases, the initial burden will have to be discharged by the income tax department or any of these agencies to prove that yes, there was an offense. So as I said, falsification of accounts. So while making the rectification in the accounts, I did not have guilty mind will have to prove by the assessee. But initially, the income tax department will have to prove beyond reasonable doubts that there is falsification of accounts. So please don't forget that the initial burden of proof is always on the agency. See, you have to explain as how and why I have not committed this offense. But let it be any offense, let it be any agency. But first, agency will have to prove that the offense has been committed. So initial burden of proof is always on the agency. So what are the powers of the authorities? If you look at all these laws have more or less similar power to all the agencies. Typically, these are the powers of the agencies, like the powers of the civil code. You take section say 19 of Benami law. You take section 131 of Income Tax Act, or you take section 8 of black money law. In all these laws, the powers given are that of the civil court. So issuing summons, recording statement on oath, all these are the powers of the civil court which can be exercised by these authorities. Of course, the power of search, issuing summons. So I have just selected a few powers which are very critical and we practically deal with. So there are multiple powers, or almost all those are similar in all these statutes. As I said, those are powers of the civil code which can be exercised by the authority. However, these are the powers like power of search. So all these authorities have power of search, but if I know it right, Benami law does not empower the BPU with the power of search. So Benami unit does not have power of search. I somewhere heard that some assessee was told that the Benami unit will conduct search and seize the documents. But Benami law has not empowered the Benami prohibition unit with the power of search. But otherwise, Income Tax Department, Enforcement Directorate, GST, all these are vested with the power of search. So they conduct the search, they seize the material. I need not tell the participants here who are experienced chartered accountants that how you deal with the search during the income tax proceedings and all. But yes, of course, I must suggest recording a statement is extremely critical. So yes, just be very careful when the client records the statement. He has to be properly advised. He must understand the seriousness of it because these are the statements recorded under oath. Then power of arrest. Oh yes. So as I said initially, the Enforcement Directorate, GST and SFIO has power to arrest. These authorities are arresting the clients wherever they prima facie of the opinion that the person has committed the offense. They record their findings in their file, and they arrest the person. So just dealing with the authorities, the proceedings before any authority, you need to be cautious. Then that authority is vested with a power of arrest. So again, we'll deal with it at the end as to how you deal with the situation, what remedies you have. But just be careful whenever you are dealing, because most of the chartered accountants we deal with the GST department also. So GST is empowered with the power of arrest. So whenever authority has power of arrest, you need to be careful. Now coming to the important part of power to summon and record a statement. So as the authorities are vested with the power of civil code, they issue the summon and they call a person to record a statement. Typically on all the summon, the option, the format which says that you attend my office on so and so date in person / through authorized representative. At least I have never seen the such summon issued by the Enforcement Directorate or agencies in which the through authorized representative is not scratched. So when they issue summon, they want the client there in person. So the client will have to attend the office. First and the most important thing is that there is absolutely no reason to dodge the summon. Never dodge, never delay the summon. In case if there is a practical difficulty, you ask for the adjournment, you ask for the time, you contact the agency officer, and please communicate well in time that due to so and so reason, if the summon is received at a last moment and a person is out of town or out of country, then please intimate the authority in time. Absolutely, there is no reason to dodge the summon. Never dodge the summon. Never avoid attending the office of the agency, because you never know what purpose of the summons is. You may be considered as a witness in some proceedings. You may not always be the accused. So if you not attending the office may unnecessarily raise the questions before the authorities. So never dodge the summon. You must attend the office. Of course, as a chartered accountant, you must prepare the client. Many times, you just receive a summon and you don't receive the annexure with the summon. So you don't know actually what record the authority is asking. It does not mean that you don't attend the office. Even in that case, you need to attend the office. You tell them that I have not received any annexure with the summon. So I have not brought any submission with me, but I'll be happy to get the submission next time, but I have attended as per summon. So summon may or may not be with the annexure. Usually you will receive the annexure with the basic data. So from the data itself, as a chartered accountant, we may understand as to what transaction or what entity and what is the purpose of investigation. So based on that, make sure that you submit all the genuine documents, you prepare your client, and make sure that the statement recorded does not unnecessarily be self-implicating. So the client shall not record something out of ignorance, which later on implicates him. So you need to prepare your client well while the client is attending these authorities. There is absolutely no need to dodge the summon, no need to hide any fact, but the way you put forward your facts is extremely important. The way you submit. So many times we feel that there is an annexure and we prepare a covering letter and we make the submission. But even that covering letter and mentioning that covering letter as to what client does, how reputed a client he is, such information also helps sometimes before the authorities, because authority may not know who the client is. They may be investigating some other case, and because of a cross reference and certain transaction, the client might have been summoned. So just to show the genuineness of a client, you need to mention certain facts in the reply also. But yes, you must respond to the summon and record a statement. But just remember that this is going to be a statement recorded under oath. As we all know, I need not tell anyone that what is the difference between a statement recorded under 133A of Income Tax Act and 132(4) of Income Tax Act or 131 of Income Tax Act. So similarly here, all these statements are similar to 131 of Income Tax Act, where the similar powers are there. The officer will administer the oath and the statement will be recorded under oath, and it will not be easy to later on retract the statement. You cannot retract it. Even you take section 50 of PMLA, all these statements are recorded under oath. So you have to record the statement once you are fully prepared. So attending the summons is extremely important, because if at all the client gets arrested, attending the summons it becomes very critical and very important later on in the bail proceedings. So never dodge a summon. In case if at all it is not possible to attend the office, it is extremely important to communicate the same to the authorities. And again, you record a statement. So as I said, it is statement recorded under oath. Does it mean that you cannot retract it, but it is admissible in the court? So that's a question. There is no straightjacket answer to it, because again, will it be treated like a confession? Because as we all know, section 25 of Evidence Act, extrajudicial confession. So the confession recorded before a police authority is not admissible in the court. Police has to prove that. So similarly, whether the statement recorded before these agencies, is it admissible or not, or whether section 25 of Evidence Act will be applicable to that or not. So, that deals with the confession statement recorded before a police officer. But whether these agencies are police officers, that is a very, very litigated issue, right from NDPS Act to all these agencies, whether these agencies and these officers are police officers or not. There are contradictory judgments, because these officers are vested with all the powers of police. They can arrest a person, they can record a state, they can do everything. Rather, they are vested with powers more than police has. Police cannot record statement under oath like this, the way these officers are given the powers of the civil code. But still, these are to be treated as police officers or not. So as a defense counsel, we always, make all the effort to show that, while defending a client, that yes, these are police officers. So the statement recorded before a police officer is not admissible, and then that will have to be proved by the police officer. So that is a gray area, I would say. But in any case, as a chartered accountant, we should be extremely careful while advising a client, that we must advise that the summon must be attended. It should not be unattended, and the client should be very well prepared when you attend the office with all the facts and documents. So these are the, about the limited information about the powers of the authorities. Now, important part is about attachment and prosecution. I will not deal with, what are the provisions of provisional attachment, what are the provisions of confirming the attachment, what are the days, time limits, and all that. But I'll just give you the broad picture about these attachment and prosecution proceedings. As a chartered accountant, we deal with a situation when the client receives the first notice under Benami Prohibition Unit, he comes to the chartered accountant. He does not go to the advocate. So as a CA, this is like a notice issued by the income tax department. But is it a usual notice? So how do you deal with that is a separate thing. But these particular two agencies, PMLA, Enforcement Directorate, and Benami Law, BPU, these two agencies have two separate remedies, rather say two separate actions which they initiate. First action they initiate immediately is of provisional attachment. Whenever they see that there is a possibility of money laundering or Benami transaction, these agencies first provisionally attach the property. Then they refer matter for adjudication to the adjudicating authority. Then adjudicating authority verifies the record and they confirms the attachment. Then typically clients prefer the appeal to the appellate tribunal against the order of the adjudicating authority. And then matter goes to the High Court. So this is one stream. Why the attachment and provisional attachment and attachment? So see, all these statutes have two provisions. One is about the confiscation of the property and other is about the punishing the accused. So in order to protect interest of the government, they first provisionally attach the property. Tomorrow, if that person sells the property, then it becomes a problem. So the first thing they do is that they provisionally attach the property. Then they investigate, they make the further investigation, they record your statement and all that. And after that, they send it for the adjudication to the adjudicating authority. So provisional attachment, adjudicating authority, appellate tribunal, all this is one route which deals with the attachments of the property, protecting interest of the government, and possibility and just ease of confiscation in future because the property is already attached. So this is just a part of the entire proceedings. The other and significant part is prosecution, which happens in the special court. So if you look at any of these statutes, you look at PMLA, you look at Benami law, all these have the provisions of special courts. So once you may think that this is about Benami property. Once the property is attached, it was initially provisionally attached, then it is the attachment has been confirmed. Then what more is left? The property is already attached. So why do we need special courts? Special courts don't deal with the attachments and the property matters, but they deal with the punishment thing. So as I said initially, Enforcement Directorate or BPU then files a prosecution complaint before the court along with all the RUDs, relied upon documents, and then they issue you the summons. Then the court takes the cognizance and you are asked to issue they issue the summons along with all the relied upon documents. So these are the prosecution proceedings before the special court. So both these things go parallelly. So once the provisional attachment is done initially, then the investigation is made. Once it is complete, then the property is attached after provisional attachment gets confirmed after the order of adjudicating authority. Then we go in appeal to the tribunal, but that is just about the property, not about the punishment. Punishment thing is discussed and decided in the special court. So I have seen many cases where people are extremely vigilant and active about the proceedings before the adjudicating authority and tribunal, but at the same time they are not aware about the proceedings before the special court. Unfortunately, I have even come across many cases under PMLA whether the clients and the earlier counsels were just pursuing appellate tribunal just to get the attachment released, but they were not aware that by that time the enforcement directorate had already filed the prosecution complaint before the special court, and special court had issued a summon, and already some 8-10 dates were gone, and the accused did not attend the office because accused was not, for some reason he was not present at the registered address, at the resident address, so he was not even aware about some proceedings before the special court are going on. So as a counsel or as a CA, we need to be extra careful that what are the proceedings going on even before the special court, whether the prosecution complaint has been launched or not. So attachment and prosecution, these are the two separate procedures, go before two separate authorities, and they may go even parallel. So these agencies, as I said, before the special courts, they file their complaints. Again, see, 173 of CRPC talks about a charge sheet, but charge sheet can be filed only by a police officer. And all these agencies, they are not treated as a police officers. They file a prosecution complaint, as I said. So before the special courts, as I said, they file the prosecution complaint. So this is just a complaint for the namesake. This is a charge sheet itself, which actually charges the accused with various charges along with the evidences. So this is nothing but a charge sheet. But as these agencies are not police officers, they file a prosecution complaint. So even as we know that income tax authority has filed prosecution before a special court in n number of cases. Even in Pune, as far as I know, some 300-400 prosecution complaints are filed before a special court of income tax at Shivaji Nagar. So those are the prosecution complaints along with all the details and documents. Once these prosecution complaints are filed, then court hears the prosecution and then they takes the cognizance and issues the summons to the accused. So that is how the proceedings start. So two important points. We just talked about the punishment. So often everyone feels that, whether abatement, there are punishment for abatement, there is offense, and there are punishments for abatement of a particular offense under all these statutes. So as a chartered accountants or even for the clients, whether are we covered by the abatement or not. So see, abatement, just quickly, I won't spend much time on this, but abatement is under section 107 of IPC. There are three limbs of the abatement. The first is that if you instigate someone to do some act. Two is about if you enter into conspiracy to do certain act. And three is about if you aid someone to do certain act. So out of these three limbs, if you look at a second limb, that is which deals with the conspiracy. Now, if you ask me, that is almost redundant because conspiracy, see, abatement 107 was drafted and was introduced by the Indian Penal Code 1860. That time, there was no provision of criminal conspiracy in IPC. Criminal conspiracy under section 120A, 120B has been inserted in 1913. So for the period from 1860 to 1913, when in all these 50 years, when there was no offense of criminal conspiracy, that criminal conspiracy was dealt with the second limb of abatement under 107. So now criminal conspiracy is dealt with separately under 120B. So again, going back to the first and the third limb, whether you instigate someone to commit something offense, I apparently don't see in case of economic offenses, we are exposed to that as a chartered accountants. We don't instigate someone to, commit some offense. But limb 3, whether we aid someone to commit some offense, that is typically a problematic thing because let me come straight to the point. In case of accommodation entries, bogus bills, in these cases, there had to be only consequences under 16C of Income Tax Act. They just used to add, unexplained expenditure. Those were just the consequences as far as the addition and tax were concerned. But now, if it is about the prosecution complaint and the punishment, then is it abatement? So if you have aided, in arranging those bills or facilitating those payments, then you may be covered by the third limb of abatement under 107. So it may be called that someone who abets or aids in that transaction for the purpose of that offense may be covered as an abator. But what practically I have seen is that the second limb of abatement, which is now say 120B of IPC, criminal conspiracy, Typically, I have seen agencies invoking 120B instead of 107. At least I have not come across 107 invoked by any agencies, because 120B is adequate enough to take care of these situations where two or more persons commit an illegal act. Or so 120A is defines the criminal conspiracy. So yes, so while any such critical transactions, as a chartered accountant, you need to be extremely careful while advising making any structure. Tomorrow, if that structure is going to be turned to be illegal, in that case, we chartered accountants may be exposed to the risk of criminal conspiracy. But yes, so there is exposure to 120B, no doubt, but apparently I don't see abatement is invoked by any of these agencies. The next important part is about vicarious liability. So in case of vicarious liability, in short, for the offense of company, the director can be punished, whether he can be punished or not. So vicarious liability is very common in civil law, but there is a settled principle that there is no vicarious liability in criminal law unless there is a specific provision in the statute to that effect. So in all these statutes which we just discussed, you will come across a section that offenses by companies. These are the typical provisions which specifies what is the vicarious liability under that particular statute for the purpose of punishment. You take any of these statutes, you will find a provision offense by companies. So for example, say in GST, offense by companies is under section 137 of GST Act. So what is the role of that director in the offense of the company? See, under GST, income tax, anywhere where they are bringing in these criminal charges, company cannot be punished. So the person who is in control of the affairs of the company will have to be punished. So that is what all these provisions say. Even if you look at section 137 of GST, it says all these provisions relating to the offense by the companies in all these statutes are identical. It says that the person, when the offense is committed, the person who was in control of the affairs of the company will be liable for punishment. So for that purpose, you need to actually see what role is played by the director. Because all these provisions are identical to section 141 of Negotiable Instruments Act. Why I'm referring to Negotiable Instruments Act is for a reason that typically in the check bounce cases, one of the directors signed the check got bounced. The other party made all the directors of that company accused in the proceedings. Is it right? Is it valid? Whether all the directors had signed the check? No. So it is a settled principle that with reference to section 141 of Negotiable Instruments Act, that you cannot just accuse someone or you cannot convict someone just because that person is like a director of a company. But we need to see what actual role that person has played in the offense. So in case of vicarious liability as a principle, as I said, and again further, not just merely being in the control, what role he has played in that thing. Say for example, income tax or GST matters where some prosecution is launched, there may be some 5-6 directors in a company. Can you convict all the 5-6 directors or only those directors who are in control of the operations of the company? And even among them, will you actually convict all of them who were in control, or only those who had actual role played in the active role played in the commitment of the offense? So as a defense counsel, we must look at it that vicarious liability is extremely important in all these economic office laws, because in most of the cases offense is committed by a company. Please bear in mind, I have seen agencies dealing with the director as if he has individually committed a crime, and rather or even chartered accountants or advocates defending that director as if he has individually committed a crime. First you need to check who has committed a crime. Offense is committed by a company, so offense is not committed by a director in his individual capacity. So you are not defending director in an individual capacity, but you are defending a company. So whether he was director in the period when the offense was committed, first thing. Second thing, if he was a director, whether he had any active role in relation to the transaction which is alleged as an offense. So these are very critical issues which, as a chartered accountant, we have access to the accounting records, we have access to the company law records, we have access to the board meeting minutes. and all that. So in case of criminal liability, criminal action, criminal charges, in case of vicarious liability, that can be taken as a very good defense. But again, that defense will be strong enough only if there is a document supporting that. Say, for example, if there is offense under any act, and that director was just a part, he was not the whole time director, or he was not even the authorized signatory of the company. How can he be prosecuted and charged for the criminal charges? Definitely not. So whenever we approach the authorities, again, as I said, if the offense is by the company, you please check when the summon is issued to the director. You make it clear in the first hearing itself that this is a case of vicarious liability which is not in the criminal law, and the person was not in control of the company when the offense was committed, and you need to produce the required documentation. So again, just give the passing reference to the board meeting minutes. Those are extremely important, because these actually will decide whether that particular director against whom the criminal charges are brought, whether he was in control of the company or not. And just make sure that all the allegations proceedings are restricted only to the director who was in control of the company. Now coming to the important action points. So this is the last slide, and I'll take some time on each of these points, because these are like do's and don'ts, and what should be your approach while actually facing these offenses, actions against these offenses. So most of these fiscal laws have the provisions of compounding of offenses. We are well aware. I need not tell any one of you about the compounding under the Income Tax Act, or even compounding under the GST Act. But we have the compounding provisions. I would say that just advise your client to go for the compounding if you see any kind of exposure to any of these offenses, and the prosecution complaint, if it is likely to be lodged, in that case, I would rather insist that you insist your client to go for the compounding. I understand that in many cases the compounding fees are very high, but still, see, for the criminal law, what is something which is of utmost importance is freedom of the client. If client goes behind the bar, then the saving of compounding fee won't help. So I would suggest, for the income tax or even for the GST, wherever you feel that when you know that the offense is compoundable, encourage client to go for the compounding, mentally prepare him to pay the compounding fee, go for the compounding, because under income tax also lot of ample time has been given for the compounding. I think even the compounding application can be filed even within a period of 1 year from the filing of prosecution complaint. So you have ample time. So please make sure that wherever possible, and wherever you feel, even if there is a little exposure to these offenses, then I would suggest that you insist client to go for the compounding. Again, 278E of Income Tax Act, presumption of culpable mental state, or similar provisions in other laws are so draconian that there is a very, very high chance and high percentage of conviction at the end of the trial in these cases. So I would suggest, wherever possible, insist for compounding. Now, I have already dealt with this initially, attendance in response to summon. So whenever you receive a summon, you mean your client receives a summon, first check the date, check the officer who has issued, whether there is a contact details available on the summon, check the annexures. It will give you an idea the purpose for which the summon has been issued, and based on that you prepare your client very well. What information is to be given, you maintain the transparency, need not hide anything, you be strong and firm on the law, never dodge the summon. That is very important. When you go for the bail, or subsequently if you go for the anticipatory bail, attending the summon is extremely important. Secondly, what you record during the statement that the client records during the summon is very important, because as I said, all these authorities are given the powers of civil code. They administer the oath and they record a statement. Whether they are police officers and statement recorded before them, whether is it a confession or not, is a litigative issue. But as a as a proactive action, I would suggest you prepare your client very well. Preparing for recording the statement is extremely important and critical. Some unnecessary information may implicate the client, so be very careful. Make sure that the client attends the summons. In case if he cannot, intimate intimate well in advance. And again, while recording a statement, again, as we all are chartered accountants, I must say that it is very important that when you record a statement during the proceedings under one law, it is extremely important to anticipate what implications of that statement will be under other law. I'll just give you some practical example which we recently faced. Say uh, some was investigated by enforcement directorate. Multiple times search conducted, multiple summons, multiple statements were recorded, and suppose someone is investigated for the corruption charges, politician for the corruption charges. So somehow all the submissions were made, all the factual submissions were made, and suppose enforcement directorate is satisfied with the submission, the person is not arrested, charges are not brought against the person. Suppose that is a situation. I'm just giving the hypothetical situation. That is a situation. Now, after a few months, income tax department conducts search at the premises of that client. That person is searched. Everything, all the material is impounded. During the post-search proceedings, 131 summon is issued. Now the person has to record a statement. And during the statement, suppose certain expenses are in gray area, whether those are bogus expenses or genuine expenses. If that is a situation, I'm just giving the hypothetical example. Now, just to buy the peace of mind, that client says you, okay, I'll admit, I'll disclose that these say 10 crores of expenses are bogus expenses. I'll pay tax on it and I'll just buy the peace of mind. That's it. I'll give the disclosure. Hypothetically. Now, if you just look at the Income Tax Act, making the disclosure of say 10, 12 crores, you would say, okay, we have 6 years of block. We'll disclose 2 crores each in 6 years, 12 crores disclosure. Fine. Let's buy peace of mind. That will be all for income tax. But if such statement is recorded, tomorrow the enforcement directorate, which is satisfied with the submissions and all the records, may again summon you and ask, summon your client and ask that you have admitted before income tax department that you had 10 crores of bogus expenses. So you have generated 10 crores of cash. So what have you done with the cash? To whom have you given the cash? What have you done with the cash? So you may, help client in getting out of the income tax proceedings or to buy peace of mind. But at the same time, you need to be careful as to what will be the implications under other law on the basis of this statement, because these agencies share the, I won't say share the records, but they share the information, of course. So usually see that the actions by the agencies follow each other. So, while as I mentioned about the summon and recording the statement, you be extremely careful that when you are recording statement under one law, please make sure that you are not unnecessarily implicating client under other law. Now, obtaining acknowledgement of submissions made. I have heard this many times whenever, chartered accountants come with a matter and I ask for the submissions already made before the authorities. I just get the submissions, but I don't see the acknowledgements. And when I ask, they say, no, they don't give acknowledgements. How can they not give acknowledgements? So I always insist that you make sure that you obtain acknowledgements whenever you attend the proceedings. I'm well aware that income tax authorities always give acknowledgement, but I'm saying about other authorities, because we may be just used to practice that we attend the hearings, the officer records on the writes on a order sheet, we just sign it and we come back. These agencies don't take your signature on the order sheet and all. So whenever you go, whenever you submit anything, you please obtain the acknowledgement, because tomorrow, they are so flooded with records, they have thousands of papers. So if tomorrow, if agency is not, having your papers handy, how do you prove that you have submitted these documents to the agency? And tomorrow agency if they are not able to find the documents, they may say that no, nothing has been submitted. It was discussed during the hearings, but nothing, we are not given any documents. So I would suggest you make two things sure. One, you actually obtain a physical acknowledgement with the stamp, or not stamp with the sign of the AO, you get the submission acknowledged. To, if at all you face, reluctance or problem while getting that, you usually these days someone receive someone through email. So after the hearing, on the day of hearing, you submit all the submission in soft copy. You send it over email to the officer stating that I attended your office today and this all submission has been made to your office. This is just for the sending the same in the soft copy just for your record. So that at least you have email trail in a way, though not acknowledged, but trail showing that you had attended the office and you had made the submission. So do attend the acknowledgement. Again, agencies with power to arrest, as I said initially, the agencies who are vested with power to arrest. On one hand, I'm saying that don't dodge the summon, you attend the office. You make sure that the client attends the office. And on the other hand, I'm saying that you be careful when the agency is vested with the power to arrest. That's your personal judgment based on the case of the client. There cannot be a thumb rule or there cannot be any guiding principle for that, because actually what client has done and what exposure he is facing under that particular law before that particular agency. So how can you be careful? Suppose say two directors are issued summon. Hypothetical example. Two directors are issued summon. Just two of them going to the office on the same day and both getting arrested, or just one of them goes to the office, maybe because of some official or practical difficulty, the other may not be able to attend the office that day, you seek adjournment. One director goes to the office, he gets arrested. At least for the second director, you can explore the remedy of anticipatory bail or criminal writ petition. So all the agencies who have power to arrest, as a chartered accountant, don't just be so innocent and take your client to the agency to record a statement. Ultimately, at the end of the hearing, you alone may come back and client may be detained by the authority and eventually arrested by the authority. I'm not saying that you need not, hide the client, but you can always explore all the legal possible remedies. So whenever you see that there is a chance of authority arresting the client, instead of you attending the office with the client and trying to convince how the client is innocent, don't arrest him, better you can explore the remedy of anticipatory bail. So this has been, my experience that most of the cases, I won't say out of ignorance, but I would say more out of innocence, that the agency had just called client just to record the statement, just to get clarification on some numbers or some transactions, and they go to the office and later on they are arrested, because GST authorities, enforcement directorate, SFIO, they are vested with the power to arrest. So just be careful whenever you are dealing with these agencies and taking client to record a statement. Back of the mind, you must anticipate that if you are running at a very high exposure, then just see if you need to explore the remedy of anticipatory bail. This is nothing illegal or illogical. You need to explore all the remedies and make sure that you're in order to take all the possible legal remedies to protect your client. The anticipatory bail again is something I'll just tell you when and how you file for anticipatory bail. When you go for anticipatory bail, basic two conditions. When you go for the anticipatory bail, there are two conditions. One, there has to be apprehension of arrest, and two, the alleged offense has to be non-bailable offense. Because in case of bailable offense, anyways, they can't hold you in custody, so you don't require anticipatory bail. So anticipatory bail, as per section 438 of CRPC, has two conditions. There has to be apprehension of arrest. So now there are so many matters where the authorities said, no, we have no plans to arrest. In that case, okay, then you record a statement, let the counsel record a statement before court that they have no plans to arrest, and then there is no apprehension of arrest, then the anticipatory bail application may very well be rejected. But as a legal point, the offense has to be non-bailable offense, and there has to be apprehension of arrest. So apprehension of arrest is a little critical thing. Say someone is issued someone under section 70 of GST Act. Then how do you decide whether this summon is going to get converted into the arrest at the end of the investigation or at the end of the statement? So there has to be a personal judgment again. But just keep in mind, and as I have already explained initially, that non-bailable offense does not mean that person is not eligible for bail. It means that the bail will be granted at the discretion of the honorable court. So in case of anticipatory bail, you have to approach the court. But for that, offense has to be non-bailable. Recently, the funny incidents happened that in one of the matters, we filed the anticipatory bail and I was appearing in the court, and someone, I don't know, from the agency or someone, some officer asked my junior that why have you filed for the bail when you know that anticipatory bail, when you know that the offense is non-bailable and you are not going to get the bail. So, this is the situation, but as a chartered accountant, you must know that check what are the charges against client, check if the offense is non-bailable, and if non-bailable, and if that agency has power to arrest, then you do think of exploring the remedy of anticipatory bail, if at all you feel that there is a possibility of arrest. And then, of course, the last is regular bail. So why all these agencies and why all these acts are provisions are thought like a draconian provisions or dangerous agencies, and why everyone is so scared of? Because there are, why I'm discussing this at the time of regular bail, for a reason that once the person is arrested, see, there are two stages when there is a possibility of arrest. Anyway, agency can arrest anytime because they have power to arrest, but there is thumb rule that when the complaint is filed up, when the prosecution complaint is filed by these agencies, when agency files a prosecution complaint, when the investigation is concluded. So there is a legal principle, that when the accused was not arrested during the course of investigation, then he need not be arrested after filing a prosecution complaint because the investigation is already over. So that is the logic. So based on that, the bail has usually been granted. Even in all these prosecution complaint cases, I must tell you, even income tax prosecution cases, in all these prosecution cases, suppose even if the client is not arrested during the investigation and the prosecution complaint is filed, you need to file bail and you need to obtain regular bail from the court. I am just taking this opportunity to tell all the chartered accountants here that in all these prosecution complaint cases, see, income tax department, they do not have power to arrest, so they don't arrest you. But once the prosecution complaint is filed and they have charged you for the offense, in that case, you need to and the court takes the cognizance and issues you the summon. Then the accused assessee has to appear before the court, apply for the regular bail, and has to obtain bail from the court. So court takes you in a judicial custody and releases you in there and there itself. But so you may ask, how the income tax department does not have power to arrest, then what is the purpose of bail? Because the court has taken the cognizance. So court takes you in a judicial custody there, and if they feel appropriate, don't have any criminal antecedents, then they will release you there and there itself. But you have to obtain bail from the court in all these cases. But in case of Prevention of Money Laundering Act, Section 45, which again is similar to the Section 212, subsection 6 of Companies Act, where SA5 comes into picture, there are dual conditions. Many of you must have read about it, must have already done some research on this. The dual conditions are very critical. What the dual conditions say, that when person is in custody, even if the complaint is filed, the person is in custody. Now the accused files the bail application. Now the court has to decide whether person is to be released on bail or not, because he is already in the custody. Initially, say, in the custody of Enforcement Directorate, later transferred to the judicial custody. So he is in jail. Now the bail application has been filed. This is a regular bail application under 439. So while deciding the bail application, these are sections, say Section 45 of PMLA or Section 212, subsection 6 of Companies Act. These are the provisions which gives the two conditions, dual conditions. Condition 1 says that the prosecution shall get an opportunity to oppose the bail, which is fair. And second says that if the prosecution opposes the bail, then the court has to record the satisfaction that the person charged is not guilty of the offense for which he is charged. So practically at the bail stage, without going into the merits, going into the trial, how the court can record the satisfaction that the person is not guilty of the offense? That precisely is the reason why the regular bails under PMLA, I mean the ED cases, typically we see getting rejected. And so I would say that, while dealing with these proceedings, that's a one way. So we need to protect the client before he's taken into the custody, because once he goes into the custody of ED, then Section 45 comes into picture, or SA5 Section 212 6 comes into the picture. So the regular bail in these cases is extremely difficult. Even if we would say that the charge sheet has been filed, everything is investigation is complete. We always make these arguments that the complaint has been filed, investigation is concluded, the person is languishing in jail. Now agency cannot even record a statement because he is in a judicial custody. Then what is the purpose of keeping him in jail? Why still the bail gets rejected? Because of the dual conditions, the court cannot record the satisfaction that the person is not guilty of the offense for which he is accused. So with these, this actually gives us the clarity or the picture as to how serious these offenses are and how careful we should be. So today I just discussed not just about how we need to protect ourselves as a chartered accountant. More than that, we have discussed how do you protect the client, because ultimately what all these agencies verify is the financial record, and we the chartered accountants are party to the financial record in one or the other capacity, maybe the internal auditor, statutory auditor, or the advisor. So when we know the record, we need to check all the possible defenses well in advance when we receive the summon. Always advise client not to dodge the summon. Just again the takeaway: attend with full preparation, maintain and submit all the documents with all the possible transparency, and never dodge the summon and face the proceedings. That is the best way to do it. So with this, I think I will conclude. I'll just thank CTC for giving me the opportunity to discuss with all the learned chartered accountants here, and I'll be happy to take the questions if any. I hope this will find you useful.
Sagar, one question has been posted by Sharad Bhai, which in the chat box, which says that whether written opinion to claim some exemption, can it be considered to be an abatement? Sharad Bhai, can you just elaborate what exactly?
See, people come over us and then they ask for the written opinion, depending upon describing various case laws, pros and cons. And we do advise that this you can claim as exemption, or say, for example, ATB, the part of this income can be claimed as exemption. Now that may happen to be something where the opinion is not acceptable. For example, the latest one I'll tell you, we have been advising everybody that the education cess is a deductible expenditure. Couple of people have also taken opinion from us, and now the law has been amended. So yes, I know my defense now that the law has now been amended, but let us assume that otherwise that interpretation is found to be wrong by the court. Can that be considered as an abatement, because the surcharge education cess normally was expected to be not deductible? Then we started giving deductible.
Right. That's a very good question. But I don't think that this may be treated as an offense. But at the same time, there needs to be some precaution, which I'm sure you must be taking by giving the disclaimers in the opinion, or even having the letter of representation, or what we share just before issuing the opinion, letter of engagement. So based on that, whether accepting the opinion